I will briefly explain about financial decision. The main contributor to a firm's growth is financial decision. A good financial decision making like capital budgeting, capital structure and working capital management is really important because it will give a big impact on company performance either in a short term and long term. An analysis of financial management must be done first before making any financial decision so that the company can see clearly what decision should they take to improve the company's operation to become more effective in future. Other than that, through analyzing financial statement of a company, we also can do comparison of balance sheet, cash flow statement, statement of shareholder equity, and income statement with competitor company. Our group will analyze the financial statement of Dutch Lady Industrie Berhad and Funfresh Berhad. Let's move to background information of Funfresh Berhad. Funfresh Berhad is a company based in Malaysia, which its head office located in Johor Bahru. It was founded by Loy Tuan Ee, who living from Job on 2005 and continued his life by establishing the wholesale milk company Semiang Berhad. It has operating two factories in Bandar Muzaffar Shah Pahang and Lakin Johor, where the plant production capability reached 12 million litre annually and estimate 1 million litre per month. Khazanah Nasional Berhad is Malaysian government investment army own 30% of Funfresh Berhad. This company are focusing in producing a natural milk that has no colouring and no preservative. Funfresh produce fresh milk, flavored milk, yogurt, plant-based milk and others. Information of Dutch Lady Milk Industrie Berhad. Dutch Lady Milk Industrie Berhad is a manufacturer of dairy product in Malaysia since 1950s. Dutch Lady Malaysia is currently a sub-dairy of Friesland Campina in December 2008. Dutch Lady Malaysia was incorporated on 28 May 1963 as a private joint stock limit company called Passive Milk Industrie Berhad. Products include growing milk, UHT milk, sterilized milk, family powder, low-fat and zero-fat drinking yogurt, and low-fat drinking yogurt. In 2011, Dutch Lady Malaysia was reported as the market share leader in growing up milk segment, holding 40% of national market share. In first quarter of 2012, showed has 9% increase on revenue of the year with a net profit of RM27.5 million. Let me elaborate further about nature of business of both company. I will start with Dutch Lady Milk Industrie Berhad. It is a dairy product manufacturer and supply in Malaysia. The company operate throughout the manufacturing and distribution range of dairy product segment. It is engaged in producing specializing powder for baby and growing children, liquid milk in different packaging form and yogurt. Dutch Lady's target market is people all ages range from baby to adults. 6 years after its start, Dutch Lady became the first milk company in Malaysia to be listed on the Stock Exchange of Kuala Lumpur known as Bursa Malaysia. While Funfresh Berhad is vertically integrated dairy group engaged in business of farming, manufacturing and distribution of variety dairy product and also plant-based product. Funfresh enhanced to a principle which is farm to shelf in 48 hours. So the time is very important to Funfresh that they must ensure all the activities are go in flow exclusively. Those activities are involving branding, manufacturing, product quality, safety, insurance and distribution.
Using the financial summary from Funfresh Berhad, we collected the data of current assets and current liabilities. From the data, it can help us to calculate ratio. From the graph, it shows that the current ratio for 2019 to 2020 and 2021 is 1.34 times, 1.18 times, and 0.79 times respectively. Moreover, we can see that the current ratio is decreasing from 2019 until 2021. Therefore, the lowest ratio represents that the company's liquidity is declining. From the graph quick ratio above, Funfresh Berhad shows a reduction in the quick ratio, which is 0.80 times, 0.73 times, and 0.39 times in 3 years that we selected as measurement periods. So Funfresh Berhad ability to pay its short-term obligation without rely on inventory is decreasing.
This is the graph for activity ratio for Funfresh Berhad from 2019 to 2021 based on the table shown before. The first ratio in activity ratio is inventory turnover. This ratio is an efficiency ratio that measures a company efficiency in controlling or managing inventory. It can also be used to determine whether there is an excessive level of inventory compared to sale. The decrease in inventory turnover ratio of Funfresh Milk Berhad has represented the company's efficiency in managing its inventory during the years 2020 and 2021. The second ratio in the graph is account receivable turnover. The account receivable turnover ratio is also known as the creditor turnover ratio. This ratio measures how efficiently a company collects its account receivable or revenue. The account receivable turnover ratio measures how often a company collects its receivable over a year. From the chart above, we can see that the ratio decreased from 4.27 times in 2019 to 4.20 times in 2020 and increased slightly in 2021, which is 5.73 times. The reduction of account receivable turnover of Funfresh Milk Berhad account receivable turnover shows that the company needs more time to collect its debt. So it shows that the company is inefficient and less liquid in 2020 and 2021. Next is the fixed asset turnover The fixed asset turnover ratio measures the efficiency of the company in using its fixed asset to generate sales such as property, plant, and equipment. A high ratio implies more effective use in investment in fixed asset to generate sales and is often analyzed along with leverage and profitability ratio. As you can be seen from the graph, the fixed asset turnover ratio of Farm Fresh Sdn was increased from 2019 until 2021, which is 0.19 times, 1.07 times, and 1.18 times. Then, the total asset turnover ratio, also known as the asset turnover ratio, measures the efficiency of the firm's investment in total asset to generate sales. A high ratio indicates that the firm is using its asset more efficiently to generate sales than the competition from with a lower ratio. From the graph, we can see that the turnover ratio of Farm Fresh Milk Senior Berhad total asset increased consistently from year to year, from 2019 to 2021, which is 0.66 times in 2019, 0.73 times in 2020, and 0.79 times in 2021. Therefore, we can conclude that the firm is more using its investment in total asset efficiently results in this. The average collection period is to measure the number of days it takes by a firm to collect its account receivable. In this graph, we can see that the average collection period ratio is increasing in 2020, which is 2 days compared to the previous year, and suddenly dropped in 2021, which is 23 days. Therefore, a sudden decrease average collection period show Farm Fresh Senior Berhad taking a shorter time to collect its credit sales. The debt ratio is a type of leverage or solvency ratio. The debt ratio measures a company reflects in amount of debt to finance. From the graph above show that the debt ratio of Farm Fresh Senior Berhad increases from 0.21 in 2019 to 0.34 in 2020. But in 2021, the debt ratio decreased to 0.30. Therefore, it indicates that the firm debt ratio is growing from 2019 to 2020 and declining in 2021 in a safe condition. Another type of leverage ratio is time interest earned. The time interest earned measures a company can meet loan requirement and lower risk of default. The graph shows that the time interest earned ratio of Farm Fresh Senior Berhad is increased stably, which is 6.65 in 2019, 6.67 in 2020, and 15.46 in 2021.
Gross profit margin shows how well the firm's management controls its expenses to generate profits. Gross profit margin is also a metric analyzed used to assess a firm's financial health by calculating the amount of money left over from product sales after deducting the cost of goods sold. Operating profit margin is a profitability or performance ratio, a measure that indicates how much profit is generated from each RM of sales after deducting the cost of goods sold and operating expenses. It also indicates how well the firm is managing its income statement. Next, net profit margin is a financial ratio used to calculate the profit a firm earns from its total revenues. It measures how much income is earned from each RM of sales after deducting all expenses, including income tax. Okay, next, return on assets ratio measures the return on company investment, and return on equity ratio measures the accounting return on common shareholders' investment. This table in this slide shows the calculation of return on asset and return on equity. From the above graph, the gross profit margin of Farm Fresh Berhad is in a stable situation from 2018 to 2020. The gross profit margin of the firm from 2019 to 2021 was 0.31, 0.26, and 0.29 respectively. The gross profit margin suddenly decreased by 0.05 in 2020 compared to the previous year, while in 2021 it has increased by 0.03. Therefore, the highest ratio in 2019 indicates that the firm can manage its expenses to make profits, while the lowest ratio in 2020 indicates that the firm's ability to manage its expenses to make profit is decreased. Next, operating profit margin dropped by 0.23 in 2019 to 0.19 in 2020. However, there is slight increase to 0.20 in 2021. Therefore, we can conclude that the profit generated from sales has decreased from 2019 to 2020, while it has slightly increased in 2021. Farm Fresh Berhad net profit margin is decreased from 0.15 in 2019 to 0.11 in 2020 and 0.07 in 2021. This indicates that the firm is not better income to shareholder. Next, return on assets was 0.10 in 2019, 0.08 in 2020, and 0.05 in 2021. Therefore, we can conclude that with the highest ratio of 0.10 in 2019 is higher return on company investment, while in 2021 is lower return on company investment as the ratio is lowest. Next, return on equity was 0.17 in 2019, 0.18 in 2020, and 0.14 in 2021. Therefore, we can conclude that with the highest ratio of 0.18 in 2020, it's higher return to shareholders, while in 2021 it's lower return to shareholders as the ratio is lowest.
Using the above chart, we can make a summary of the 40 ratio of farm price India Berhad in the horizontal analysis. We can say that 2018 is the best year for this company. This is because farm price India Berhad gained more profit in 2018 compared to the other 2 years. Moreover, farm price India Berhad faced COVID-19 pandemic in 2020 and 2021, and it caused the company difficult to gain more profit.
Now I will continue with horizontal analysis of Dutch Lady for current ratio. According to the graph, the current ratio of Dutch Lady milk industry Berhad will be 1.08 times, 80.89 times, and 1.58 times for the years 2019, 2020, and 2021 respectively. The lowest ratio so indicated a decline in the company's liquidity. Quiet ratio of Dutch Lady milk industry Berhad. This ratio evaluates the company's capacity to meet its short-term liabilities without resulting to inventory. According to the graph above, Dutch Lady milk industry Berhad quick ratio decreased from 0.91 times in 2019 to 0.42 times in 2020, before abruptly rising to 1.05 times in 2022. The Dutch Lady milk industry Berhad capacity to meet its short-term obligations without drawing on inventory is declining in 2019 and 2020. Now I will talk about horizontal analysis of activity ratios. Dutch Lady milk industry Berhad, which is inventory turnover, account receivable turnover, fixed asset turnover, and total asset turnover. According to the graph, the inventory turnover ratio will be 4.92 times in 2020 compared to 4.90 times in 2019. However, it will fall to 4.56 times in 2021. Dutch Lady milk industry Berhad decline in inventory turnover ratio over the years 2020 and 2021 has been seen as the company's inefficiency in managing its inventory. The ratio of account receivable turnover increased from 9.45 times in 2019 and 13.5 times in 2020, and it went to 14.84 times in 2021, as shown in the chart above. The company needs more time to collect its debt, as seen by the decline in Dutch Lady milk industry Berhad account receivable turnover, and it demonstrates that the corporation will be less effective and liquid in 2019, 2020, and 2021. The graph shows that Dutch Lady milk industry Berhad fixed asset turnover ratio decreased from 8.26 times in 2019 to 5.23 times in 2022, and further decreased by 5.17 times in 2021. As seen in the graph of total asset are being turned over on average less frequently each year, from 2.4 times in 2019 to 2.21 times in 2020 to 1.62 times in 2021. As a result, we can draw the conclusion that the company is not effectively generating sales over the course of these 3 years with its investment in total assets. Second is average collection period of Dutch Lady milk industry Berhad. According to our research, the average collection period ratio for 2018, 2020, and 2021 respectively is 38 days, 27 days, and 24 days. As a result, it conditional drop average collection period reveals that Dutch Lady milk industry Berhad collects its credit sale more faster.
Now we move to the horizontal analysis of leverage or solvency ratios. One type leverage or solvency ratios is the debt ratio. According to the graph, Dutch Lady milk industry Berhad debt ratio, which remained constant at 0.67% in 2019 and 2020. However, the debt ratio falls to 0.545% in 2021. As a result, it suggests that the first debt ratio will be decreasing in a secure manner in 2021. The second is time interest and ratio. The graph demonstrates that Dutch Lady milk industry Berhad time interest and ratio climbed from 624.56 times in 2019 to 636.02 times in 2020, before abruptly dropping by 186.83 times in 2021. We move to the horizontal analysis of the profitability ratios. The first is according to the graph. Dutch Lady milk industry Berhad's profit margin for the years 2019 to 2021 was 0.38%, 0.32%, and 0.35% respectively. In contrast to 2019, the gross profit margin unexpectedly fell by 0.32% in 2020, while it went up by 0.35% in 2021. The second is the operating profit margin for the Dutch milk industry Berhad increased from 0.20% in 2019 to 0.60% in 2020. In 2021, there is a small increase to 0.90%. The third is the net profit margin for the Dutch milk industry Berhad, which dropped from 0.5% in 2019 to 0.07% in 2020, and then rise to 0.22% in 2021. This shows that the company will not be providing shareholders with a higher income in 2019 or 2020. The fourth is the return on asset for the steady mix industry Berhad was 0.23% in 2019, 0.50% in 2020, and 0.35% in 2021. As a result, we can draw the conclusion that while the return to shareholder is better in 2019 with a ratio of 0.71%, while it is lower in 2020 with a ratio of 0.44%.
Next, I'm going to present about comparative analysis, or we know as vertical analysis. First, we will start with comparative analysis of liquidity ratios. There are two of them, which is current ratios and quick ratios. By referring the graph, we will look at liquidity ratios for 2021 for quick ratios and current ratios for Dutch Lady, Milk Industries Berhad, and Farm Fresh Milk Sendirian Berhad. By using the data that we collected from the balance sheets for 2021, there are differences for current ratio for both of companies. In the graph, we will see that the current ratios for Dutch Lady, Milk Industries Berhad is 1.58 times, while the current ratios for Farm Fresh Milk Sendirian Berhad is 0.7 times. This means that the current ratios for Dutch Lady is greater than Farm Fresh Milk. This also goes to quick ratios for the both companies. Quick ratios for Dutch Lady, Milk Industries Berhad is 1.05 times, while the quick ratios for Farm Fresh Milk Sendirian Berhad is 0.39 times. That means that quick ratios for Dutch Lady, Milk Industries Berhad is higher than Farm Fresh Milk Sendirian Berhad. We will move to comparative analysis of activity ratios. For the first graph, we will look at inventory turnover, account receivable turnover, fixed asset turnover, and total asset turnover, inventory turnover. By looking at the graph, we will see that Dutch Lady, Milk Industries Berhad is lower than Farm Fresh Milk Sendirian Berhad. Next is account receivable turnover ratios. By looking at the graph, we will see that the account receivable turnover ratios for the Dutch Lady, Milk Industries Berhad is greater than Farm Fresh Milk Sendirian Berhad. Next is fixed asset turnover ratios for the both companies. By looking at the graph, we will see that the fixed asset turnover ratios for Dutch Lady, Milk Industries Berhad is greater than Farm Fresh Milk Sendirian Berhad. And the last ratio that we will look in this graph is total asset turnover ratios. In total asset turnover ratios for Dutch Lady, Milk Industries Berhad is greater than Farm Fresh Milk Sendirian Berhad. Next, we will see the average collection period. Average collection period is also one of the activity ratios. In this graph, we will see that the average collection period for Farm Fresh Milk Sendirian Berhad is greater than average collection period for Dutch Lady, Milk Industries Berhad. And the third one is we will look at comparative analysis of leverage or solvency ratios. The first graph that we will look at is debt ratio graph. In the graph, you will see that Dutch Lady, Milk Industries Berhad is showing the high percentage of paying their debts in futures compared to Farm Fresh Milk Sendirian Berhad. The second graph that we will look at is time interest ratio. Based on the graph, we will see that time interest ratios for Dutch Lady, Milk Industries Berhad is higher than Farm Fresh Milk Sendirian Berhad. And the last one is comparative analysis of profitability ratios for both companies in 2021. By referring the graph, we will see that profitability ratios for Dutch Lady, Milk Industries Berhad is higher than Farm Fresh Milk Sendirian Berhad. The profitability ratios we can see by comparing gross profit margin, operating profit margin, net profit margin, return on asset, and return on equity for the both company.
Firstly, by using SWOT analysis, to strengthen and expand Farm Fresh Milk Sendirian Berhad and Dutch Lady Milk Industries Berhad by using a SWOT analysis, a corporation can review its current position and condition, summarize its historical performance, define a future strategy, plan for the present, and plan for the future. The letters SW both these stand for strengths, weakness, opportunities, and threats, respectively. It can help in handling really difficult correspondence. It can be applied to determine a company's development strategy or to research the ripples and state of the market. Second, by using consumer information, most business can learn what kind of milk the client dislike from the outcome. Most companies can only produce a certain amount of milk, which is indirectly lowers the amount of milk stored in the warehouse and prevent the waste and disposal of fresh milk. Additionally, the business can cut back on expensive large-scale production. Third is train their staff. Farm Fresh and Dutch Lady can also train their staff in further cost-saving techniques, particularly in the areas of production, packaging, and data collection. This is to make sure the employers to continue to develop their abilities so that the business can rise the caliber of its workforce. The last recommendation is multiple cleanings. In order to avoid interfering with production, the corporation must also make sure that the manufacturing warehouse is consistently maintained in a good condition. As a result, there is a lot of consumer demand, which allows the production process to be free. Conclusion: for Fresh Milk Sendirian Berhad and Dutch Lady Milk Industries Berhad is a company that provides and distributes fresh milk to consumers in Malaysia.
Based on the analysis of Farm Fresh and Dash Living Malaysia above, their daily sales and the inventory of the two companies are not the same. The sales in inventory for Farm Fresh are always increasing from year to year. Our daily sales in Farm Fresh inventory in 2019 and has shown increased sales performance in 2020 and 2021. And while the sales inventory for Dash Lady company is also increasing year by year. Those 3 years show not too significant change from 2019, 2020 and 2021. Therefore, goods company need to manage inventory wisely in order to maintain an increase in average daily sales from year to year. This matter needs to be taken into account so that each company does not experience hard losses.